Eric Muadit, Mother.com with World Market Analysis for the weekend of August 29th and August 30th, 2015. Let's take a look at the markets here. We begin by taking a look at the Nasdaq weekly. And we see that with about 45 minutes to go before the close of this week, the market is positive for the week. Surprise, surprise. And we are looking at the Nasdaq right now showing weekly RSI support here based on a line that began this nice move off the lows of 2012, and the market went on a nice run. So as long as we are looking at the potential for this being support on the weekly, this could suggest that after all the events of this past week, if the market can hold above the green line, then the market is starting to build for a recovery. Otherwise, if we break below that green line is when we can start really thinking that the market has broken. So for now, there's hope if you're a bull that if this holds, that's good. Otherwise, if we break that green line, then that's going to be confirming some of the monthly charts. So I would say as we come to the end of the week, if this can hold, this is good. And actually, that is a surprise based on how markets opened the week on Monday. And so what we're going to see across the globe is a lot of the daily markets have a question mark, but the weekly charts are starting to look a little bit better than they were over the past week or so. For example, if you take a look at the Canadian market on the daily, if you draw a line connecting RSI tops, as of right now, we are coming back to test the top side of that line. If the market wants to go higher, it's going to have to clear that resistance on the daily. And so with about 45 minutes to go, so the Canadian market is trading up about 0.55%. If it can clear that resistance, that's good. Otherwise, this looks like it could stall around here for a day-to-day pullback. And if this is confirmed as resistance on the RSI, maybe that also influences how the weekly looks. If we take a look at the Canadian market from a weekly standpoint, just like the Dow and the Nasdaq, we can see here that if we go back a couple of years on the weekly chart, and I'll show you that in a second here, with a little bit of an adjustment, you can see that we can draw a line connecting recent RSI lows right there. In fact, let's draw that with a green line so we can show that it's been support right here. If you take that zone, you can see that market's been bouncing on that green line going back to 2011. All these have been support, double bottom support here during these lows, and double bottom recently here during these lows. So if this continues to be what's going on, where if the market continues to build on this support, I think that suggests that the market is actually not as bearish looking as it was at the end of last week. Again, this is a 2-year weekly. The previous chart was a 5-year weekly. And so somewhere around here, this green line from a 2-year standpoint is where markets have been finding support with uniform action, testing the green line and back above it. We see that this looks like a V-type formation. As long as that's the case, there's some hope that this could actually stem the recent slide in the market. Of course, the biggest problem with most world markets is the fact that they are moving their monthly RSI and MACD to 3-year lows. That tends to be the classic sell signal. And that's the problem here, is that we are facing markets that are still trading at 3-year lows on the monthly, on the RSI, which is a bearish signal. And also we are looking at the MACDs also, at least one of the MACDs pushing to fresh 3-year lows. And clearly that is the strongest bearish argument, that the market have already given us a major sell signal. And what we are seeing here taking place in truth is actually a market that is just bouncing before the big slide. If you take a look at the hourly for the Canadian market, we see that it is coming back after this Monday morning open, somewhere around here at the lows of Monday. We've come back off the highs, nice recovery here, but we've come back now. We are testing the top side where the market has been stalling on the hourly. As you can see, the most recent high, which is somewhere around here, came on the red line, and we see that we are struggling to hold above that right now. So if this is confirmed resistance as we end the week and as we begin the new week, it might suggest that there's more downside based on the bearish monthly chart. I can point out here, if you take a look at the Dow 30-minute chart on the Dow, you'll see that it is also showing resistance that we've been watching the last day or two. If you take the top side of the weekly on the 30-minute chart for the Dow and S&P 500, you see that the market is struggling to move above that level. So the more this is confirmed as resistance, the more it suggests that we pull back day to day, or maybe hour to hour, and maybe we might even influence those weekly charts that are currently showing support. If you take a look at the Brazilian market by way of the EWZ, the ETF, you'll see that recently it broke through this line here. And you can see that if we extend the same line, right now it is showing a backtest failure, which might suggest day to day it's due for another pullback. So that's one argument for a pullback there on the Brazilian market. And let's not forget that the problem here is, again, we look at the monthly chart, and the monthly chart is already giving us the classic sell signal, because we are looking at the MACDs and the RSI on the monthly moving to fresh 3-year lows. So that's the biggest problem here, is that as of right now, the threat of staying below to 3-year lows is the biggest risk, and also the fact that the MACD could very easily, both MACDs could easily continue being at 3-year lows. And so we're looking at the Brazilian market having this look and feel for a market that could actually even see lower prices. If you take a look at the FTSE from a weekly standpoint, you can see that it is indicating support on the weekly. This chart goes back to about 2011. If you draw a line connecting recent lows somewhere around there, you can see that on this weekly chart, every time it's come and bounced on the line, we had a multi-month rally as far as the FTSE is concerned. Double bottom support here for a nice rally. And also recently we came and touched that line there for these lows somewhere here. So as long as it is defending that line on the weekly RSI, the market has a chance of moving higher. If you see that it is building on that support, then that's good support. One can go back, look for long side ideas. The problem is, if coming into the new week, if we break below that red line and push lower, that would be the problem. So support is great. A break of that would be bearish. And of course, on the monthly, the problem with most markets is, again, we are looking at markets showing the classic sell signal that markets are moving to fresh 3-year lows. This is the biggest and the strongest bear market signal you can find. So that push to 3-year lows is a problem right there, unless it can solve that in the coming months. And also the fact that one of the MACDs is already below 0 and also pushing its monthly RSI to fresh 3-year lows. So the problem is that the big time frame is not looking good. If the weekly does not find support, then that's going to lead to another big drop in most markets worldwide. If you take a look at the French market, we can see that it too is showing support or potential support on the weekly. And there are two lines to discuss here that the French market is showing. Line connecting RSI lows going back 2011. Let's extend that line like that. You can see as of this week's close, with a positive close, the market is showing support. And as long as that line is showing support on the weekly RSI, surprisingly, this market could actually be looking to move higher. Obviously, if we break below that, that would be bearish. But for now, we are seeing support. Also, there's another line where the market has been bouncing, just like it did on the FTSE, is if you draw a line right there on the weekly RSI straight line, right there, which is where it began this nice move here. And that movement off the lows of 2012, the market went on to record a nice rally over the next couple of years. So we are here, we've seen that it's found support around the line there once before for nice lows here. Double bottom support here on this, both of these lows came on the line for a multi-week rally. And now as long as that is support, that would suggest that that would be a market that could also be moving higher, unless it breaks. If it breaks, you definitely have to be bearish. If it holds, then that is all the bulls need to see for a market that could move higher. Now, because we are approaching the end of this month, we have to start considering what the new month might bring in terms of different energies in the coming month. If you take a look at the long-term picture for the French market and draw a straight line connecting RSI lows, you can see that going off the lows of 2009, as of right now, there's a possibility that on a monthly basis, this could actually be support. So if this line holds on a monthly chart, that would suggest that in the coming months, the market might move off, bounce off this line and trend higher. Otherwise, if we break below that line of support going back to 2009, then that would truly usher in a market that wants to go down. Also, we can see the same type analysis if you take a look at the German market on a monthly chart going back 10 years. Let's extend this line like that. And you can see that it has a chance on a monthly basis to find support on this line. If it can bounce and show support with the blue line there, that's good. Keep in mind, that's one view. The other view is if it can continue holding above 50. It's been holding above 50 for the most part since about 2011. So ever since it moved above 50, it has held above 50. So if it bounces off this 50 line, that's going to be good enough support. It's done that a couple of times. You can see here it bounced off the 50 level for these lows on the monthly and bounced off the 50 here or close to it during this period here in 2010. And as long as it is bouncing above the 50 level and also showing some type of support, just like the French market, some type of support on the monthly RSI, that could be good enough for a bounce. So as we go into the month of September, let's be aware the energies might change, markets might show support, markets might bounce on the 50 level of the monthly RSI. If they bounce and show long-term support, then maybe the markets are not broken. They are actually pulling back after a nice run. Having said that, I have to emphasize again that the biggest risk in this market is the classic sell signal. Even for the German market, as of right now, with a nice recovery this week, we are still looking at a market that is showing that it has broken to fresh 3-year lows on the monthly RSI and also on the monthly MACD. So you can see here, this is not a good sign. As long as that's the case, that's not good. And also we see that one of the MACDs is just about to break to fresh 3-year lows. If that happens, then this is truly a market that is, despite the nice recovery this week, still poised to go lower. So we have to watch the new monthly energies as we begin the month of September to see whether we are seeing a bounce on the RSI or a continuation of a break to 3-year lows on the MACDs and on the RSI. Let's take a quick look at the Russian market by way of the ETF RSX. And what we see here, it has a nice recovery off the lows of Monday, just like most of the market, but it's coming back on the daily to a level where it might stall. There was a break right here, just above 50, which was sometime in late May. If we draw a line from there, we can see where this ETF has been struggling. Every time it hits that line and shows resistance, it pulls back. Resistance there, it pulled back. Resistance here, it pulled back. And now after this last 4 days of a move higher, it is seemingly showing resistance here. That would indicate to me day to day that maybe the markets are due for a pullback after a nice recovery off Monday's lows. Let's take a look at China. China's come off the highs here about 5,200 and has touched the lows of about 2,800. So that's a major drop. But I think there's an argument here that on the weekly, this thing has found support after the amazing volatility. If you draw a line connecting RSI lows, or at least a line where it's been bouncing, right there on the weekly time frame, this is about 4 years of weekly data. You can see that the lows can be seen on this green line. So that's double bottom support here for these lows, and then support on this line here during these lows of about 2014. We can also draw another line connecting RSI lows going back to 2011. It will be something like that. And it connects nicely with the lows here, these lows on the weekly RSI, these lows, and it touches that low there. You can see this is where it closed around this level for the week. So maybe we are looking at a market here that could find support on the weekly as far as China is concerned. We take a look at the monthly also, and on the monthly we see that if you take a look at this big move, began when the RSI jumped to 3-year highs. As you can see here, the RSI jumped to 3-year highs right there on the monthly. So that's the major classic buy signal, or the ultimate Muade breakout. So that was a nice breakout there, met the minimum requirements, and obviously the stock market in China had a nice massive explosion here in price. So what I'm getting at is there's a possibility that it has come back to test that line on the monthly. If that line holds, then this is a market that could actually bounce as we begin the new month of September. So watch that for support. Anything showing support on that line would suggest that after the recent pullback, this market is due for a push higher in the coming weeks and in the coming months. Now, this is not the only market showing weekly support. As we've seen across the globe, lots of weekly support on the weekly RSI. Take a look at the KOSPI. Draw a line connecting RSI lows, and it connects nicely to recent lows on the weekly RSI going back about 4 years. This is a nice support. So clearly, if this market can build on this support, it could move high in the coming weeks. It also happens to be where it's been finding support on that green line. So let's draw that again. So this is where it's been bouncing on the weekly. You can see it bounced off those lows here, bounced off the green line here, which is this entry, bounced off that green line, which is somewhere around here, and also this double bottom support, found the lows there. So if it can build on those support on those two lines, it might have a chance of moving higher. The problem is, now that we have a clearly defined support line, if it breaks below that, you have to be aware that that is not a good sign. Support is great. Break would then suggest that it is now due for a massive and true bounce, or a true break of support, which would lead to prices being sustained to the downside. Let's take a look at Japan, and we can see that the Nikkei did find or come back to test the RSI lows line on the weekly RSI. This again going back about 4 years. We can see that it connects nicely to the lows on the weekly time frame, and this week also this closed exactly around the line there, which is one level of support, and the other level of support is coming somewhere around there. The green line is where it's been holding during pullbacks. You can see this pullback zone. Oops, let's draw back that line again. So the green line there, it held support during these months here during the pullback. It found support on the green line, again support on the green line here for these lows here. So I think right now, if it can hold both lines, that's bullish. Otherwise, these clearly defined lines, if they break, then that's when we begin the big and strong slide to the downside. I think the way we ended the week, the market did end the week on a good note. Let's take a look at the Nifty. Take a look at how it closed for the week, and we see that we closed just like the other markets I'm just discussing here. Take a look at the line connecting recent RSI lows on the weekly. It's 4 years worth of data. You can see it connects nicely to the lows. So if that is where it stopped the slide this week, if it can bounce on that line, expect this market to be on a recovery mode. So that's one line of support. And again, the other line comes from this green line right there, where it has been bouncing over the last couple of years. It bounced off this green line, nice entry there for a swing trade higher, bounced off this level for a nice swing trade higher, which is here, again held there for a swing trade higher, held here for a swing trade higher, and also held at this line here, which is this lows. So right now, it also held recently here, which was the lows here for a nice swing trade higher. So all we are getting at here, it looks like markets are finding support on weekly time frames, just where they need to find support, which is a good indication of where markets want to go. Obviously, if we break those two lines is when we can start looking to turn bearish again. If you take a look at a 2-year weekly chart for the Nifty, simple level here to watch, which is a recent 2015 weekly closing lows. The price to watch there is 7982.90, which is this weekly closing low. Anything below that is bearish. Right there, it closed above that, so that's good. Otherwise, if we break below that, that can be used as a sell signal. So let's keep it simple here. Anything below that price would be a bearish signal because it's breaking down. Otherwise, the more it holds above that 79.82 level, the more this is a market that has found good support on the weekly time frame. If we take a look at the hourly chart for the Nifty, you can see that there's a simple line connecting the RSI tops right there. Here I'm using RSI period of 26. So you can see if the Nifty is to jump and clear this line of resistance on the hourly, then that's maybe when it begins a nice move higher. Otherwise, right now it looks like resistance. So the more this is confirmed as resistance hour to hour, the more it might suggest that on an hour to hour basis, the market has to pull back first and foremost. So you need a clear breakout on the hourly. Otherwise, short term, we are still looking at resistance as far as the Nifty is concerned. If we take a look at the Australian market, and where have we seen this before? We've seen this across the globe. If you take the RSI lows line and connect them, you can see that they connect nicely to where the market found support this past week. This is a very bullish argument. If the market can continue holding that line on the weekly RSI, this market could actually bounce. There's also another line right here where it has been bouncing over the last couple of years. You can see support on the green line, nice lows there on the Australian market, support on the green line, nice lows, support on the green line here, nice lows somewhere here, and also it came close to support here, which was the lows there. Right now we are holding above that line. Anything building above this and moving higher is a good indication of where the market wants to go, which is higher. And obviously, because we have a clearly well-defined line, if we break below that, then that's when we can start looking for reasons to turn bearish again. I think the way the market's closed for the week, you have to admit it was a strong showing by the market bulls. So let's conclude here by taking a look at the South African market. As you can see, to me, one of the reasons why the market started looking bearish the last couple of weeks is because this market moved to fresh 3-year lows on the monthly RSI, which was a signal that other markets might start doing the same. So we see a move to 3-year lows, and also the MACD was doing the same thing. So you got the RSI at 3-year lows, MACD at 3-year lows as far as the South African market is concerned. That's not a good sign. But actually, if you take a look at the weekly, there's a chance that this could actually be not as bad as it seems, depending on how it reacts in the coming weeks. For example, if you take a look at this long-term weekly chart going back 2006, you can draw a line connecting RSI lows, and I'll show that to you. Actually, a line connecting recent support levels right here, right there. You can see ever since the lows of 2009, you can see the market has actually been bouncing. So ever since the lows here, the market has been bouncing on the green line with support on the weekly chart for move higher, support here for move higher, support here for these lows, and support here late last year, which was these lows. And now looks like we are moving back above that line. So if the market can sustain this support, that's good enough support for a bounce. Obviously, we always have to be aware that if it breaks, then that's when we have to really understand that the market is poised to go lower. The way we ended the week, and since I don't know what the new week is going to look like, nobody does until we see the new data, it seems to me that the market did close the week with nice weekly support on most markets. If the weekly support continues, expect markets to grind higher. Eric Mwad with Mwad.com. Good luck, peace, and blessings. Woo! Yeah.